Imagine catching the next big wave in investing before everyone else notices. That's how fortunes are made. And right now, there are a handful of companies shaping the future of technology, finance, and energy in ways most people haven't even wrapped their heads around yet. If you stay with me through this breakdown, you'll see why 5 stocks spanning AI chips, electric vehicles, fintech, and crypto are at the heart of some of the biggest trends of the decade. By the end, you'll have a roadmap of ideas worth digging into further. Before we dive in, make sure to subscribe to MoneyQuest Broker so you never miss insights like these. Alright, let's kick things off with AMD. For years, NVIDIA has been the undisputed champion in artificial intelligence chips. But the game is changing. AMD isn't just catching up, it's preparing to leap ahead in ways that could shake the entire industry. In the past 6 months, AMD's stock has climbed around 30%. That's not luck, that's execution meeting demand. And the bigger story isn't what's happened, but what's coming. AMD is rolling out its MI300 chips and gearing up for the MI400. Here's the shocking part. The MI400 is expected to be 10 times more powerful than its predecessor and stronger even than NVIDIA's current lineup. 10 times, not 10%, tenfold. Think about what that means. Meta, Google, Amazon, and Microsoft need mountains of AI chips to power their data centers. If AMD can deliver chips that outperform NVIDIA's at a lower price, those contracts could start shifting. Big tech isn't sentimental, they're efficient. And if AMD keeps this pace, its $250 billion market cap could be on a path toward $500 billion and beyond. NVIDIA will still be strong, but suddenly AMD doesn't look like the underdog anymore. It looks like the challenger that could rewrite the story. Now let's talk about NIO. The stock has been hammered, trading near $4 after once soaring above 40. Most investors have walked away. But beneath the surface, NIO has been building something unique, a model for EV ownership that few others can match. Instead of waiting 30 minutes at a charging station, NIO drivers pull into one of over 2,300 swap stations, and within 5 minutes their battery is replaced with a fully charged one. It's actually faster than filling a gas tank. And here's the genius move. Customers don't even have to buy the battery, they lease it. That lowers upfront costs for buyers and gives NIO recurring subscription revenue, like Netflix, but for cars. Add to that their in-house development of chips, autonomous driving systems, and smart cabins, plus expansion into Europe, and you can see why this isn't just another car company. Yes, there are risks. China's economy has been shaky and competition is fierce. But the Chinese government has made EVs a national priority, backing the industry with subsidies and policy support. Companies like NIO aren't just private businesses, they're part of a strategic vision. At $4 a share, it's risky, but it also has the kind of upside that only comes when sentiment is at rock bottom. Next up, Robinhood. A lot of people still think of Robinhood as the meme stock brokerage, but it has grown into something far more serious. A global fintech platform with an $87 billion market cap and momentum toward $100 billion. What makes Robinhood so interesting is its business model. It actually makes money in up and down markets. More trading? Well, it just means more revenue, whether the market is rising or falling. Payment for order flow, options activity, crypto trades, interest on margin, even uninvested cash. All of it feeds Robinhood's bottom line. And now, they're expanding globally. Launches in the United Kingdom, Germany, and France put them in front of millions of new potential users in markets where trading activity is really high. Crypto is another engine here. With Bitcoin pushing near $120,000, trading volumes are exploding. Customers see a free, easy-to-use app. Behind the scenes, Robinhood is monetizing every single click. They've built the perfect model where users feel empowered while the company captures consistent revenue. It's kind of like the picks and shovels play for retail investing. Traders might win or lose, but Robinhood takes a cut either way. Fourth, we move to NU Holdings. If you've never heard of it, that's exactly the problem, because this is one of the fastest growing financial companies in the world. NU is actually the largest digital bank in Latin America, with more than 100 million customers. That's more than PayPal, Cash App, or even Sophie. Operating mainly in Brazil, Mexico, and Colombia, NU has really thrived because, traditional banks in these countries have been expensive, slow, and honestly pretty outdated. By offering sleek, mobile-first services with low fees, NU is sweeping up millions of customers who are just skipping over traditional banks entirely. The growth numbers are honestly jaw-dropping, over 5 million new users every quarter and revenue growth above 70% year over year. Unlike a lot of high-growth fintechs, NU is already profitable with more than $2 billion in cash on hand and, very little debt. And here's a name you'll definitely recognize, Warren Buffett. Through Berkshire Hathaway, he invested in NU multiple times and is still holding. That's pretty rare for him, especially in fintech. At under $15 a share, NU offers a combination of rapid growth and profitability that's extremely hard to find. As it expands into loans, investments, and insurance, it's building an ecosystem that could, really dominate banking in Latin America. And now for the fifth stock, Coinbase. Crypto might feel like a roller coaster, but behind the scenes, the rails are being laid for a much bigger future. Coinbase is the backbone of that system. Bitcoin is near $120,000. Ethereum is rising, and new ETFs are flooding in. But honestly, the real story is who facilitates these moves. Coinbase doesn't just serve retail investors, it's the trusted partner for institutions like BlackRock and Fidelity. Custody, settlement, staking, on-chain analytics, you name it, Coinbase provides the infrastructure. Their market cap is under $100 billion, which looks small compared to the trillions expected to flow into crypto in the coming years. And the beauty of Coinbase's model is simple. Whether crypto goes up or down, trading activity generates revenue. In fact, volatility is often better for them than calm markets. So, think of it kind of like the gold rush. Back then, prospectors were all fighting for those gold nuggets. But honestly, the real winners were the folks selling picks and shovels. In the world of crypto, Coinbase is selling the picks and shovels. Alright, so let's wrap it up. AMD is gearing up with AI chips that could be, 10 times more powerful than NVIDIA's, really positioning itself as the ultimate challenger. NIO is reinventing EV ownership through battery swapping and subscriptions. Robinhood is scaling globally and monetizing trading activity in every market environment. NU Holdings is reshaping banking for over 100 million people in Latin America, all while staying profitable. And of course, Coinbase is the infrastructure powerhouse behind crypto's explosive growth. Now, just to be clear, these aren't guaranteed wins. Nothing in investing ever is. But, they're all tied to megatrends that are honestly too big to ignore. And remember, this isn't financial advice. You should always do your own research, understand your risk tolerance, and invest based on your own goals.